What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Today, we're going to talk about CPI that came out this morning, go over some Bitcoin and macro charts, and then take a look at the wider world with Twitter. There's a lot going on, so let's share the screen and jump in. CPI, where is it? I have it pulled up here. There we go. Share the screen, and I think I can make myself a little bit bigger. Let's see. Oh, look at that. Look at that. There we go. Okay, CPI came out this morning for June, and it was 0.3%. Of course, that's pretty high annualized for the month of June, but we'll click into it. We had also an increase due to a basing effect. The smaller number fell off of the 12-month rolling sum and was replaced by this higher 0.3. So the year-over-year number did jump up from 2.7 to 2.9. Of course, a lot of people, it's fewer now, but there are still some people talking about a reacceleration of inflation. Of course, you guys know if you've been around with my content, I said it was going to be transitory the whole time. We're pretty much back at 2%. If you take out shelter, we're definitely back probably below 2%. We can take a look at that. But let's just read through this a little bit. I usually do a live stream in the mornings when this drops at 8:30, but didn't do that, so we're going to cover it here. Consumer Price Index increased 0.3% on a seasonally adjusted basis in June after rising 0.1% in May. Over the last 12 months, all items index increased 2.7% before seasonal adjustment. The index for shelter rose 0.2% in June and was the primary factor in the all items monthly increase. So again, this is shelter. Shelter is the main component here. For somehow the American real estate market is maintaining this elevated level. Volumes are way down. There's massive amounts of homes out on the market, but rents, owner equivalent rents, and these other things have yet to fall. But it is just a matter of time before that happens. Shelter isn't going to skyrocket higher all by itself. It is going to follow the general trend of the rest of the basket. It just happens with a big lag. And I've seen a lot of commentators out there saying, the shelter component is so messed up that we pretty much should either come up with a different way, new methodology, or just not consider it at all. Because when you do take the shelter component out, CPI is pretty low. So, okay. The energy index rose 0.9% in June. Gasoline index increased 1%. The index for food increased 0.3%, as the index for food at home rose 0.3%. The index for food away from home rose 0.4%. Okay. Index for all items less food and energy, so this is core, was 0.2%. Now, if we annualize this number, it gets to 2.4%. 2.4% for core on a single month annualized rate. And last month was 0.1. So that's a 1% annualized rate. So if you average out just the last 2 months, it might be interesting to track a 3-month annualized quarter. So over the last 3 months, the core, what has it looked like it's doing? Because if you wait a full year, you're not going to get a very sensitive measurement. It's very cloudy, and we've talked about this a lot, especially going back to 2022 and when we were seeing really high year-over-year numbers. Watching the year-over-year doesn't give you a very good indication of what is going on in the economy right now. That's why I like to concentrate on the month-over-month number, but even maybe stretching out to a quarter-over-quarter could have some information in that as well. Let's see. Indexes that increased over the month include household furnishings and operations, medical care, recreation apparel, and personal care. The indexes for used cars and trucks, new vehicles, and airline fares were among the major indices that decreased in June. And the all items index rose 2.7%, ending in June, after rising 2.4% over the 12 months ending in May. Okay, so I had those numbers wrong. It was 2.4% last month, and now year over year is 2.7. The all items less food and index rose 2.9% over the last 12 months. Okay, blah, blah, blah. So let's go in here and take a look at shelter. Shelter is down here. And you know what? I'm going to go ahead and share a different screen for you guys on Telegram because I think it'd be better this way. Okay, shelter is down here. You can see the months, June 0.2. So it is, April, May 0.3, June 0.2. It is starting to come down. Okay, there wasn't a, like in January 0.4. This number got up to very high, 0.8, 1%, stuff like that. But now let's go into the charts and go to we want this one, and we want to set it on regular scale and take the moving averages off. All right. So if you guys are new to my content, this is what I've been talking about for a long time on CPI. So we had this post GFC normal era. And what happened was in the GFC, in the Great Financial Crisis, was kind of like the top of this credit-based system that we have. So if you want to have like the best economy possible, maybe between 2000 and 2008, it was a little bit bubbly, and there was obviously a bubble in the housing market. 2000 was a bust in the stock market. So that's why I say if you go back to the 90s, that was pretty much the peak. That was the peak of everything. Peak everything in the 90s. Then the end of the system pretty much happened in the Great Financial Crisis, and we're in the tail end of a dying credit bubble, global credit bubble, diminishing marginal returns. You have just enough credit creation to keep it from popping. Okay, and that's what I call this post GFC normal, 1 to 2% CPI inflation. Then we had COVID, of course, and a ton of fiscal stimulus, plus the biggest part of the COVID price increases was supply chains. The supply chains stopping from around the world. So you had a big crunch in supply. I remember ordering stuff, and it was 6 months before you could get something that you might get next week prior to COVID. One of the things we had some new patio furniture. This is kind of random, but we had some patio furniture that we were ordering in 2020. And normally it would be there at the showroom or at the store, and you could just bring it home or get it delivered the next day. But this was on back order for 6 months, and things like that. There was major supply crunch in appliances and everything. And then you had the fiscal stimulus on top of that. And so, prices rose during that time. But they didn't go out of control. I mean, 9% on the CPI is not crazy. Lots of countries have much higher CPI inflation than that. But then here in July of 2022, we hit a brick wall. And I was waiting for this because, as prices increase and wages don't increase along, as fast, eventually people are starting to pull back on their spending, and it will appear in the economy all of a sudden. And so this was the brick wall that I was talking about a lot back in 2022, and that happened. And then we entered a period that I was expecting going back to post GFC normal. So again, this is the normal at the end of this long credit bubble. We have low growth and low inflation, just barely enough credit creation to keep the wheels on, right? And so that's what we're seeing here. And if you look at this period, we have had 3 now negative prints, and I expect us to have more negative prints because we will be going into recession here sooner or later. So that's my view here of the CPI. Now, if we go into Fred and we do CPI less shelter, share this tab with you guys. So the Fred database, and we'll do this percent change, okay? Month over month. First, we'll do this first. So here, this is CPI less shelter. And actually, let's go to year over year. See what this is doing. So this is, it's around 2%, but see, it was down at 1.35 down here in at the end of last year, right around 1. And now it's coming back up. It's right at 2. So if you do CPI less shelter year over year, you're looking at 2%. And again, shelter is a lagging indicator. It's kind of broken the way that it's measured in the CPI. It's measured a different way. There's a different methodology for the PCE, and each country will have a different methodology for how they do shelter component for their CPIs. So it's a really weird thing. It's not like you're going to measure the cost of meat, a pound of meat or something. My family's spamming me with text messages right now. Stand by. Had to mute notifications. All right. So yeah, what was I saying? Oh gosh, that made me lose my train of thought. Oh yeah, the other countries will measure their shelter components differently. It's not an apples to apples comparison within one government how they measure shelter. Now just imagine that across nations and agencies within those other nations. I mean, shelter is a very complex component to figure out. So if we just X shelter, I think we come up with a much better view of what prices are doing in general. And again, if we do this post GFC normal, you can see back here in 2017, this is what it looked like back then, and this is what it looks like right now. And we had this intermediate period in the middle that, a lot of people don't get why there's this shape, this transitory shape here. And that's because this is a year over year measurement, right? And so the larger numbers take a while to get into fully priced in to this number. And then as those numbers work their way out, then it comes down the other side. So you get all these, this is the typical shape. If we go back and we look at all of these other ones, they have this same typical shape. All right. And that is exactly what we expected as transitory here. And that's what happened. Okay. So that is that. Let me see if there's any comments now. Did you catch Balaji's recent interview with Marty on TFTC? If so, any thoughts specifically? Has your thinking on China changed? I did not see it. I will watch it. Maybe I can react to it live here. My thinking on China hasn't changed, really. Their economic model is over. I think I've been pretty much vindicated on talking about deglobalization for about 6, 7, 8 years now, deglobalization. And China's economic model is not built for deglobalization. They have overcapacity, and a lot of people will look at certain production events that happen, like they have awe over how much production China can do, and certain things that are, they're meant for media consumption to show how great China is. But those things just scream to me of overproduction, right? And so they're overproducing into this major financial crisis that they're under a demographic crisis and complete economic model crisis. So no, my thinking on China hasn't changed. But yeah, I would like to react to Balaji. Okay, what's up, Florida Bitcoin? Let me see if Telegram has any comments. Do-do-do. Okay. All right. So that's that. Let's go into the charts a little bit more. This was the CPI that we were looking at. Let me just make sure this is coming in properly. Okay. Political Science Denier says, curious what you think of the potential for alts to pump after BTC. Are we done with this trash or no? I want to believe that there won't be an altcoin season for sure. And I think that a typical altcoin season is not likely, where we have these massive pumps in all these shit coins everywhere. I don't think that's going to happen. I think maybe Ethereum, maybe a couple others can pump, but it will be lackluster. And everybody will be waiting for the rug, so I don't think they'll pump nearly as much as Bitcoin, and they will have their pump, but then it'll crash again. They'll get all rugged, and that might be the last one. But that's the only thing I'm thinking. All right, BTC. Big down day on the day. Let's see. Big down day for Bitcoin recently. Okay, and we're used to having 10% down days. This is a 3% down day, and it feels like a major one. But anyway, 2.97% on the day. One thing that we were looking at, and I tweeted out a lot, or I tweeted out earlier today, was this CME gap. Now, a lot of people don't like technical analysis. I get it. But the way I view it is technical analysis should be done within a broader macro framework. Okay. But you have a good understanding of what is happening in the world. Then you can look at the charts and you can say, oh man, look at this specific level. Then when the major thing about TA for me is Schelling points. Now, if you don't understand what Schelling points are and you're new to Bitcoin, it's kind of an older concept in Bitcoin, but Schelling points are just something that attracts attention, like a self-fulfilling prophecy. Okay. So if I have 4 squares, 3 of them are green and 1 of them is red, and I have 2 people, and I say, hey, you 2 guys, if you both pick the same square without knowing what the other picked, if you can pick the same square, I'll give you both $5, $20, whatever, you win. And then what square are they going to pick? They're going to pick the red square because it's just something that attracts attention. So on the chart, we have the same sort of thing. And CME gaps in general are up there. Bitcoin it's really interesting because other Bitcoin charts don't have gaps. So if you look at like Bitstamp, it's open 24/7, 365. There are no gaps on this chart anywhere. 0 gaps. The only gap that could actually happen on here is like if there's a 1 second fidelity here, and between seconds, the price changed a lot. Like say the price changed $100 within 1 second, right at the time when that candle switches from minute to minute or hour to hour, day to day, whatever. Then there can be a gap, but that's very low likelihood of happening. So really you can say there's no gaps here on a normal Bitcoin chart. Okay, a Bitcoin exchange. But when you go to the CME, we have gaps because they have trading hours and the price moves outside of trading hours. And so these gaps then act as Schelling points where you have people place bids around this, and there's a lot of trading activity that's around a gap. And so they usually tend to close. That means, or fill, I don't know exact terminology you want to use, but it crosses back over that area. So here's one from back in April that did not close 100%. So let's go in here. This was April 23rd. And you can see it didn't quite get there. It tried to come back down and close it, but it missed it by about a couple $100. And we can have periods where there is a lot of interest. So people are placing bids around this gap to be filled. So let's say you have a gap, and let's just make this really big so you guys can see. Okay. And talk about this, and we'll replay, and we'll go back here. All right, let's go forward one. Can we do that? Uh-oh, what happened? I lost it. Okay, we'll go right. No, that's today. Stop. Yes. Okay, sorry. I'll get it right. So this gap didn't close, but there's a reason, and we can kind of discuss this. So let's do this different. Let's just replay right to there. Okay, that looks better. All right, so we have this gap open up, and earlier in the day on this candle, so it opened up way up here, 93.9. So we would actually move this up here. That's how big the gap was at the open of the day. Okay. So then people are placing bids. A lot of people, oh, this gap is going to close, so I'm going to place a bid right here. Right above the bottom, because I want to get the best possible price. So I'm going to put my bid right here. Well, someone else is like, well, I think everyone's going to put their bid down there. So actually, I'm going to make sure that my bid fills. And so I'm going to put my bid right there. And then someone else says, well, man, I think this area has a lot of attention, and I want to make sure my bid gets filled. So I'm going to put it up here. Okay. But I know that it's probably going to run down and start to fill this gap. And I want to make sure that mine gets filled. So I'm going to put it there, and see how you just keep going up. So if there's a lot of attention around this, it's a very bullish environment. The bids are going to go higher and higher within this gap. All right. And then if we roll forward, let's go forward one. And that wick comes all the way down past those bids and the selling pressure to get to close the gap is satiated at this point. So it gobbled up all of those bids down here, and it didn't quite fill the entire gap. But what this tells us is that there is a lot of interest. There's a ton of bullish interest in the market, and there was a lot of bids, and the demand was enough to keep it from filling. All right. I guess that's what I'm trying to say on that. So, okay. But usually these gaps, that isn't the case. You see, this is a specific circumstance coming off the lows, just broke this resistance. Okay. The day before, a lot of bullish interest. And so there was enough demand to not completely close that gap. I hope that makes sense. But gaps usually close very quickly. Let's look at this one. And it can go for a long time. So this one got closed here from way back here in November of 2024. And it didn't get fully closed until March. But it did come back and close that gap. So I think I beat this dead horse. So if we're looking now at today, It's possible that there was enough demand to gobble up all the selling pressure and this won't close. But the likelihood is that it will close. Okay. And that goes down to 114. 114 even, we'll just call it 114 even. So that's the Bitcoin price. All right. Wonder what you guys are having any comments on that. Got some spammers. I'll delete that. Point says scammers starting to pick up again. Yeah, notice that. So there's a lot of attention coming back into the space. Crypto AC says, any thoughts on today's crypto bill decision? We'll cover that here in a second when we get to Twitter. All right, let's just go through a few other charts. Speaking about the altcoin cycle, here is the Ethereum Bitcoin chart. I did post this in Telegram earlier. It's trying to make a breakout here. It is a slightly higher high than right here. So interesting. If we throw on the moving averages, which one did I have up? I think I had the 200 and 365 on that chart earlier. If you see the 200-day moving average provided resistance. Now this again is another Schelling point. 200-day moving average, very commonly watched moving average, and people will specifically here, people were selling. When the price hit the 200-day moving average, they were selling. So it took a while to get through and gobble through all of that selling until the sellers were exhausted and it was able to break out. Now it is on some horizontal resistance. If you go back here, so we'll see. We'll see if this breaks out. Hope it doesn't, but whatever. Gold still consolidating sideways. We'll see where this leads. Could be a slight, bullish bias here on this, but I do expect it to continue consolidating, and Bitcoin will take the baton from that. Now, this was an interesting one that I posted in the Telegram earlier today, and this is the dollar. And if you guys are unfamiliar, just watching me for the first time, that this dollar, I am not necessarily a dollar bull, but I'm a dollar pragmatist. And in a dollar-based system, credit-based system, where the creation of credit creates the demand for the dollar itself, and actually excess demand. So if I take out a $100 loan and it's a 5% interest rate, there is excess demand for dollars. I need those dollars back to pay off the loan and interest. So a lot of people will say, oh, the U.S. military backs the dollar system. Kind of, yeah, it does. It does to an extent. But more, like monetarily, what backs the dollar is the debt, the demand for the dollar to pay off the debt. And why can't people just default? Well, some do, but that's not, you will try to avoid that. You will try to avoid defaulting on your debt. It's not good for anybody. So anyway, so here's the dollar, and where's my 50-day moving average? It never came back. I've been kind of waiting for this. What is going on here? Why can I not see the 50-day moving average? Do I have the wrong one? Yes, I have the wrong one. I don't know what that one is. Okay, so we touched the 50-day moving average, and you can see we broke out of this downtrend, getting really close to this 50-day moving average. This would be big if we could break out of this and go north of here. I do expect the dollar to basically strengthen in the end of a credit-based system like this, because dollar is still king and people need dollars everywhere around the world to pay off dollar-denominated debt. Trillions and trillions, tens, maybe hundreds of trillions of dollars worth of debt out there in the world, and people need dollars to pay off that debt. Okay, so that is the dollar, US 10-year. Very surprising here, rising again. Still below the Japan and European scares. These two peaks was Europe and Japan. We also have a Japan scare kind of right now. The 30-year Japanese government bond yield is spiking. Just looking at comments. Okay. That's the U.S. 10-year. I do expect it to go lower, but when this happens, yields will fall as we're going into recession. So we're not going into recession as this is spiking. Remember, the 10-year and the 30-year, they represent growth and inflation expectations. Particularly, I say growth / inflation. They're kind of both the same thing, or they're two sides of the same coin. When you want growth, you take out credit, you borrow money. When you are growing, you borrow money. And so growth and inflation expectations rule this US 10-year. So if the 10-year is going higher, then that means the market expects growth and inflation to pick up. Maybe this is a response, temporary response to CPI this morning. That could be it. But CPI is not going to stay elevated, so the 10-year probably will come down as well. All right, that's the 10-year. I can't answer any questions on that. Oil, the long-term support, long-term support that turned resistance for a period, broke through it during the Israel-Iran-U.S. debacle, and it's trying to fight back, but looking pretty weak, if you ask me. Looking pretty weak. We'll see where this develops. Of course, long term, I expect it to probably hit. Let's see, where's 50? I expect it to hit 50 before 90. That's a good way to put it. So here's 50 roughly and 90. So I expect it to hit 50 before 90. That's what I would say. And this is mainly due to, one, we have deglobalization, and the economy is really bad all around the world. China, Japan, Europe, US, everywhere is either in recession, borderline on recession. And in that specific circumstance, the marginal demand is just not there for oil. Okay. On top of that, there is things like EVs that are getting more popular. I don't think that that's going to be a huge, like, long-term impact, but EVs are becoming more popular. Hybrids are becoming more popular. There's better gas mileage for vehicles. What else? And demographics. If, say, Japan is losing 1 million people every year, they're not just simply, they will have fewer people demanding oil, demanding energy. And so we have great technology. We can get lots of oil out of the ground, but there's fewer and fewer people every year in the developed world. I'm not counting Africa and stuff, because that's where all the population increase is coming from. But they just simply don't demand as much resources out of the global economy as a high income country citizen. So as we lose the high income country citizens, the marginal demand for oil will fall. And so I expect it to be weak. I don't expect there to be any sort of runaway oil price. All right. And lastly is the S&P 500. Opened at an all-time high, but has been down on the day. But again, nothing spectacular. When I look at this chart, let me put it on regular. Okay. When I look at this chart, we can draw a few lines here. So previous all-time high, we can draw that as support. We can draw this most recent high as support. and maybe even a trend line here. Let's see where this is going. So those are the lines that I would be looking at, as well as the moving averages. This is a 50-day. Let's see, 20-day. So the 20-day has been really good as support. So those are what I'd be watching on the stock market. Again, my general thing for the stock market in this period is for the stocks to do relatively well. Now, you might be thinking, oh, you expect a recession, but you expect stocks to do well. Yeah, I expect stocks to do well in the lead up to a recession, because what are people doing? One, they're passively investing. There's a passive bid on the S&P 500, on Dow Jones, whatever. There's a passive bid out there. People just, they have it programmed. This much out of my paycheck is going into retirement, and that's going into this index fund. There could be also like Apple, or they pick big companies that they like. They're not going to pick some no-name company to passively invest every single month, but they'll pick the big Magnificent Seven or FANGs or whatever. And so that's why usually what will happen is that the larger companies will get a larger share of the passive bid, and gains will be more concentrated. It's just natural. It's logical. Also, people are tightening their belts, and they're not going to be spending. So maybe instead of buying that new car, they're going to ride out with their junker another year or two. They're going to push it as far as they can and not buy a new car, and they're going to dump that into their investments, into their retirement or something like that, savings. And so that will find its way into the stock market. So in the lead up, as people are tightening their belts and putting more into savings and retirement stuff instead of spending, then they will, the stock market should go up in the initial stages of a recession. And then once we're into that recession and people have to start liquidating perhaps some of their retirement, some of their savings, then stocks will come down again. All right, let me take a look at comments on the other platforms. Roderick, welcome. Yeah, thanks, man. I'm going to be more regular here again with the streams. Okay, so that was SP 500. That was all the macro charts. Let's go into the Twitter. And we did have a question earlier on the crypto bills. And we have this here, this reporting here. So let's listen to this. Let me just make sure that I'm sharing the audio. Stand by. Reshare. Okay. Let's go.
Advance in the House, I believe. Let's get the details from Emily Wilkins. Emily.
It's kind of quiet, but it's maxed out volume.
Hey, Kelly. So yes, this House was just holding a procedural vote that would have then led to the vote on 3 different crypto bills, and that procedural vote has failed. Now, we should note, of course, here that rule was not just on crypto bills. It was also going to set up a vote on funding for the Defense Department. We're trying to learn a little bit more about why the bill went down, but this definitely puts a wrinkle into House Republicans' plan to have this crypto week where they were going to pass crypto bills. You have to get that process vote in place to actually move on to the other votes. One of the members who did vote against the process, Congresswoman Marjorie Taylor Greene, actually tweeted a bit this morning, voicing some of her concerns with the bill in relation to a central bank digital currency. She was concerned that the bills did not do enough to prevent that from being created by the U.S. government, saying that more oversight was needed. Of course, we'll be speaking with more of these lawmakers who voted against the bill to better understand their concerns, how many of them had to do with crypto versus defense. But again, this is a huge wrinkle. There were a lot of folks, crypto industry lawmakers, who were expecting these bills to get done this week. It now looks like Republican leaders might need to go back to the drawing board to figure out how to get this done.
All right. So my thoughts on this. I mean, it's not going to be a straight line. It's not going to be an easy battle. Um, it's not going to be without its hurdles. But I do think that there will be good legislation against CBDCs. Thank you, because CBDCs are terrible. They will cause hyperinflation. They completely change the profile of what a dollar is or a euro is. And so this CBDC that they're pushing through in Europe, it's going to lead to very, very high inflation. And because it's a brand new type of money, it's not credit based money. And so if they print it, it's going to be extremely inflationary. But it's good to put that ban on. I think that has tons of support, both in Congress and from the administration and from the people in general. And so I think that will happen, that we will get a ban on CBDCs. Do we need it even? I don't know, because Powell has said that they don't have the power to make a CBDC. And I agree. According to the letter of the law, they do not have the power to do that. And so they would have to actually pass something in the affirmative to get a CBDC through Congress in order to do that. Anyway, so, and the stable coins, we'll get stuff with the stable coins sorted out. And Bitcoin, the Bitcoin reserve, that will happen as well. I wish it would happen sooner. But they already have the ability to start buying in a budget neutral way. So overall, this isn't like anything earth shattering for the industry. It's just a little bit of a setback, and we will get it going on the next time around. So that's what I would say about that one. Political Science says, there was an infographic this week showing Myers-Briggs categorization for Bitcoiners with INTJ, INTP making up greater than 50% of BTCers. Any insights on this from your end? Yeah, I think I fall into that. And I can't remember exactly which one I fell into, but that's been around. This is just resharing of something that has been around for a long time. People know the Bitcoiners are, in the autist side of the spectrum. In my opinion, the quiet, analytical thinking autist types seem like they would always be the canary in the coal mine for emerging tech that is ripe to cause some creative destruction, e.g. radio, internet, etc. Yeah, from a technological perspective, yes, but not maybe from a social perspective. So social technologies like internet, and then you talk about social media. Okay, so the autists would think, oh, internet's really cool. That's who built the internet. But then they might not have predicted social media, because they're a little bit on the different on the social side. So yeah, I haven't looked at that in a while about Bitcoiners versus general population, but isn't it, like let me just look that up real quick. So it's INTJ. Introverted, intuitive, thinking, and judging. Introverted. Yeah, I would say so. That's the crypto people. Because there's a long history with online currency and introverted activities, like online gaming and things like that. World of Warcraft Gold was a pivotal early online currency. You also have like gold bugs that don't, they tend to be a little bit more introverted. Intuitive, I don't know about intuitive as much. I mean, I think I try to look at things intuitively, but thinking, yes, definitely 100% on the thinking. and judging. I don't know about that one. Probably tend to be more on the libertarian side and judging things about society and things like that. So yeah, I would say definitely Bitcoiners would be high in that. And these people are probably the leaders. What are they called? Architects here? I'm looking at this on Architects, aka conceptualizer, director, mastermind. Interesting. I haven't looked at that in a while. Okay, let's get back to Twitter stuff. Let's listen to Saint Onge. Here he's talking about 69 economists discover tariffs didn't cause the apocalypse. And, I was here on my show or on Telegram when I was doing live streaming only on Telegram during the tariff thing and the Liberation Day. I was saying, this is probably going to be deflationary. Everything, like the overall trend is deflationary. And going towards a deglobalized world is going to be deflationary. I went on a long rant on Friday's stream. If you guys go back and watch that, about overall in the world, the amount of deflationary pressure is enormous. It's enormous. And it doesn't really, the Fed losing is deflation, actual shrinking of the money supply. And inflation would be the Fed winning. They kind of want inflation. They want 2% inflation at least, right? And so that's winning for them. Deflation is losing. And the overall pressure in society is for a shrinking credit market globally. So that is deflationary. Now, a lot of people will push back if you're just finding my content and you're a gold bug or a Bitcoiner that hasn't really thought about these things much more past like, oh, the classic gold standard had falling prices. Okay. But the classic gold standard was very inflationary. People don't get that. Okay. The supply of gold in reserves, so the amount of money in the world, went up by an average of like 3 to 5% during the classic gold standard. It was inflationary. Now prices did gently decline, but prices are not inflation or deflation. Prices go up and down for a lot of reasons. So the gold standard had slight inflation. So now if we're talking about Bitcoin standard, I mean, we've never had a thing that's fixed supply used as money. We don't know how it's going to react. I think it's going to be good, but it's a theory. It's a theory. We can say that currencies that were less inflationary perform better. And so if you take out all the inflation, they'll perform even better. Hardest money always wins, but the hardest money doesn't always win. Look at 1971. What happened? Gold didn't win. By popular vote. I mean, not literally a popular vote, but if people wanted to use gold, they would still use gold. If they wanted to use silver, they'd still use silver. And people want inflation. People want inflation. So the system evolved naturally into the credit-based system that we have today, but it did that within a environment of global trust being very, very high, especially after the Cold War, going back to 90s being the best decade. After the Cold War, that decade after the Cold War was peak of everything. Peak trust, peak global cooperation, peak globalization. Well, maybe not peak globalization, but, peak global trust and peak, I would say, impetus behind globalization. So anyway, let's listen to what Saint Onge has to say here about these tariffs being deflationary.
Mainstream economists are climbing off the ledge on the tariff wars, raising forecasts for growth, jobs, and inflation, pretty much the Goldilocks combination. This is all despite tariffs that were supposed to send us into hyperinflation, plus a Federal Reserve strangling the economy with some of the highest rates in 30 years, despite inflation running about 1% since Trump took office. The news comes from the Wall Street Journal, who surveys 69 mainstream economists every 3 months. The previous survey came in early April, so that was just after Trump's Liberation Day tariffs. Now, given these mainstream economists who feared tariffs more than chlamydia, back then they were predicting tariff-induced Armageddon, with nearly 50-50 odds of a recession this year and growth plunging to just 0.8%, which is barely above population growth. Now, back then, they pegged inflation rising to nearly 4% from tariffs and unemployment rising to almost 5%. Now, 3 months into the Great Tariff War, and with no inflation in sight, they are climbing off the ledge. Their recession odds are back down to 1 in 3, which is below what they predicted this time last year under Joe Biden. For comparison, prediction market Kalshi recession odds went from 61% in April to just 19%, which is also lower than under Biden. The economists bumped up GDP and job forecasts, although they're still pessimistic, so just over 1%.
I'd like to see what the market odds are between a recession and reflation. Because I think there is a difference between we just have to get past this year and then we're going to continue to grow, and growth is going to speed up, and we're going to reflate the economy, yada, yada, yada. We're going to have boom time again. Like, what are the odds that the next extreme is a boom or a bust? I think that would be nearly 100% that it's a bust. And so, yes, I have been waiting for this recession for a long time. I have been saying, pay attention to crunch points, and we analyze things as we go. But the overall direction is towards the bust extreme. We're not going to take off and go higher, like have a great economy with tons of growth and see 5% growth before we see a recession. And will we ever see 5% growth on this current system? Probably not. I don't think Europe definitely won't. China definitely won't. Japan won't. So there's no source of growth other than perhaps the U.S. can grow because we'll have capital flight into the U.S., both financial capital flight and human capital flight. And so there's a possibility that the U.S. can grow while the rest of the world is stuck at no growth and aging and declining. And so, but I would say the next extreme in a boom bust cycle, the next extreme is the bust. So that's what, even though the odds are shrinking that this year we'll see a recession, you never know. I mean, most people don't see a recession coming. They see it's different this time and yada, 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 all this stuff. But I would like to see the extremes.
And on the year, this is because they're counting mass deportations and government layoffs, which mechanically subtract from GDP, but of course make us richer. In other words, 1% GDP growth with deportations and defunding U.S. aid might be worth 2+ in normal times. Most important, the economists slashed their inflation forecast to 3%, now saying tariffs will contribute just 0.7% to inflation. Now, 0.7% from tariffs is not the Armageddon we were promised. And keep in mind, these are mainstream economists. So what changed since April? Beyond the lack of tariff inflation, Trump turned in much stronger job growth than the mainstreamers expected, averaging 150,000 per month since he took office. That's enough to take unemployment down to 4.1%, which beats 85% of unemployment rates since 1980. Meanwhile, unemployment claims have been tame despite hundreds of thousands of federal reductions. The New York Times pegs it at 285,000. Pair that with wage growth that just hit a 60-year high as American workers replace illegals, and it is driving a recovery in consumer confidence and business confidence that should drive both spending and investment. So it's next brought to you by iTrust.
Like his stuff. Short, sweet. Really like it. So things going on in Spain over there. So this is the kind of the section of the stream where go randomly around the news cycle. And Spain is having some protests. Actually, I have that pulled up. Let me go to that page. So here's a tab. This is Great Britain News Channel. Great Britain News, whatever. Anti-migrant protests erupt in Spain after prisoner assaulted by 3 Moroccan men. Anti-migrant protests have erupted for a second consecutive night in the sleepy Spanish town after a 68-year-old pensioner was allegedly assaulted by 3 Moroccan men. I heard there was gangs of these guys going around and trying to assault the Spanish people. Torre Pasqueto, I'm not going to be able to pronounce that, is in the country's southeast, was rocked by fury after the attack was captured on film and shared online. It triggered a series of protests, which have left several people injured. Dramatic images of the town showed how groups armed with batons and fireworks clashed with police, with local media reports claiming protesters were actively searching for foreigners. 68-year-old victim told Spanish media he was beaten in the street on Wednesday by 3 young men from North African origin. So you can see some of these images here. Looking pretty intense. What I've seen is they're brandishing these guys or they're labeling these guys as far right, and I think these protests are just going to increase. I don't think there's any hope in Europe for this decreasing. I think it's just going to continue to spread and increase. We're seeing it in the United States as well. And the United States is kind of showing a way for people to, well, first off, El Salvador showed the way. Then the U.S. is deporting all these people. And Europe they're going to have conservative parties take control politically. I saw somewhere that a poll of Spanish people, 70% wanted to deport all of these North Africans that have come over. That's higher than the U.S. It's about 60%. So it's very popular idea over there in Spain, and it probably will happen. So I think all of these things are going to increase, and this is not a good environment for business. Okay, it's just not a good environment for business. So this can kick off a recession. And again, it's not a good way to get growth in the future. You know, if you're getting rid of a bunch of immigrants, and your GDP is going to go down. There's just fewer people doing fewer things in your country. And whether that's a good thing or bad thing morally or culturally, economically, it's not a good thing. And I'm not saying you should make decisions based on economics, but I'm just trying to say what will likely happen here. It's going to be bad for these economies. And a lot of people will say, hey, I'm willing to put up with a recession if we stop this criminal activity, if we stop having to pay for these people to come over here and have government services. And so they're willing to take the hit economically to save their culture. And that's perfectly understandable, logical, and I agree with them. Okay, so that's that. Let's go back to Twitter. Just a few more here. Oh man, I saw this. This was hilarious. Hilarious. This guy. Turn it down. So this guy. That your wife wants done. I think that sounds like a great side gig. Genius. Okay, let's see here. This is the CEO of GameStop, I believe. GameStop CEO Ryan Cohen. And let's see what he has to say here on CNBC about Bitcoin.
Think about crypto in the middle of all that.
We made an investment of just over $500 million into Bitcoin, and I look at it as a hedge against inflation and global money printing, and we'll see what happens. So,
but how much should people who are investing in GameStop think of you as some kind of like portfolio of assets and maybe even like a mini micro strategy or something?
No, I mean, we have our own unique strategy, and we have a very strong balance sheet, over $9 billion of cash and marketable securities. And we will deploy that capital responsibly as I would my own capital, and only look for opportunities where the downside is limited and there's a lot of upside. So we'll be opportunistic when we see those opportunities.
All right. So he seems like he has a very level head on his shoulders. Of course, they're probably going to be adding more Bitcoin, especially as Bitcoin continues to rally here in the bull market. But 9 billion just waiting on the sidelines to go in. Let's see. Oh, this lady here is a champ. So last year, she would drive Uber in the evenings after work. She would take 5-hour shifts and make about $150 and immediately save it into Bitcoin. Since then, the price of Bitcoin has doubled, and that $30 an hour is now $60 an hour. And this is great. This is what a lot of people should do to start stacking Bitcoin. Okay, what else we got here? Oh, yeah. This is my sentiment, at least right now. So Bitcoin is hitting these all-time highs, 120, 121, 123. I feel nothing. I don't feel any excitement. I don't feel like there's any excitement out there either in the general ecosystem right now. Maybe it's because, altcoins are lagging. And so a lot of the FOMO that would be coming from the altcoins is not. I mean, who knows about in the boardrooms and all this stuff. I know the treasury companies, they're licking their chops. They're getting some FOMO. But this is not anything really to get me excited. I think 150 is going to be a pretty big number. And then 200. 200 is going to be where I think people start really saying, whoa, what's going on here? Let's take a look at Bitcoin. Okay, so that's that. Okay, last video here. This guy he's a Fed chair contender, Kevin Warsh. And he was on, what's this? It's with the Hoover Institute. I can't remember the name of the show, but they talk about Bitcoin here.
You made reference to Bitcoin, and I thought I heard a little bit of condescension that people are buying Bitcoin and these things.
But doesn't it, Charlie Munger, this is 2 or 3 years before he died, Charlie Munger attacked Bitcoin. He called it evil, in part because it would begin to undermine the Fed's ability to manage the economy.
Or it could provide market discipline, or it could tell the world that things need to be fixed.
Bitcoin does not make you nervous.
Bitcoin does not make me nervous. I can hearken back to a dinner I had here in 2011 with a
orange tie, Fed chairman, possible candidate, loving on Bitcoin, saying it's going to bring back discipline. It could fix things. It could help fix things. Wow. We go from getting Trump, the first Bitcoin president, to now possibly a chair. I mean, Besant also owns Bitcoin, and he's also in the running. So it looks like the next Fed chairman is going to be a Bitcoiner. That is huge, guys. Now, it can also, they're undermine the dollar. No, Bitcoin is going to back the dollar. Bitcoin is going to be the thing that saves the dollar. It's going to be the thing that saves any other currency that wants to be saved in the coming 10 years is going to be saved by Bitcoin. They're going to have to back their currency with Bitcoin. That's what I think.
Someone who is another guest on your show, I won't say his name. Okay, I just did Mark Andreessen, who showed me the white paper. That was the original white paper. I wish I had understood as clearly as he did how transformative Bitcoin and this new technology would be. Bitcoin doesn't trouble me. I think of it as an important asset that can help inform policymakers when they're doing things right and wrong. It is not a substitute to the dollar. I think it can often be a very good policeman for policy. And if I were to speak more broadly to what did Charlie Munger and others perhaps have in mind, there is a proliferation of securities that go under all sorts of names. Many, if not most of them, are not worth what they might be being traded for. So what did Charlie say?
Shitcoins. He's saying shitcoins, people using the term crypto and cryptocurrency, which Satoshi did use the term cryptocurrency, but he used it much later. I think he wasn't the progenitor of the term. Cryptocurrency came much later. And the idea of cryptocurrency, the idea of crypto, latching on this entire different segment of scams, unregistered securities, centralized projects onto Bitcoin, that's what a lot of these people see. And that's one reason why I'm a big stickler for calling these people out, saying, stop saying crypto. You know, crypto week. The White House is saying crypto week. Okay? It's not crypto week, it's Bitcoin week. You got to get out of that phase. It's not crypto, it's Bitcoin.
And maybe his pal Warren say there's the innovators, the imitators, and the incompetents. There are real innovators that are happening in and around that new technology. And what I would try to impart towards businesses and bankers is that the underlying technology that Mark showed me in that white paper, or tried to show me in that white paper, it's just software. It's just the newest, coolest software that will provide us an ability to do things that we could never have done before. Can the software be used for good and evil? Yes, both, like all software. Right. So I don't cast aspersions like that. If there's a final point, it's these technologies are being built here. I don't just mean on Stanford campus. I believe in the United States. And the world's most talented engineers from China and Europe and everywhere, they come to the United States even now to try to build this stuff. And my view is by building it here, that gives us an opportunity to be more productive and create something very special over the next decade.
All right. Very good. Very good stuff. He said there that he sat down with Marc Andreessen, and Marc Andreessen is the one that showed him the white paper and all this stuff. I mean, I read the white paper a long time ago, and I remember I was getting introduced to Bitcoin through like the Free State Project there in New Hampshire and stuff. And I was a gold bug, and I very initially, the first couple weeks, maybe first couple days, I don't know, that I'm looking into Bitcoin. I'm disregarding it. I'm thinking this no way this can work. Okay. Like he said, it is just software. But then I understood cryptography. Like I didn't know anything about cryptography. So I had to do a deep dive down into cryptography and understand hash functions and how those were one-way hash functions. And once that clicked in my head, then the whole system fell into view. And yeah, I was hardcore right from the beginning about Bitcoin. So one thing I'll say about his conclusion here, that it's just software. I don't think it's just software. Bitcoin is not just software. Bitcoin is almost a living organism. I don't know, you could use a bunch of different analogies. So living organism, decentralized distributed network like this is a life form almost of its own. And it sources energy for itself and has workers, like we are kind of the phenotype of the Bitcoin organism. The Bitcoin code is its DNA, and we are the phenotype, not just the mining equipment, but the people and our minds. We are all part of this Bitcoin organism. You could also say it's kind of like a nation state, or it's maybe not a nation state, but it is a state, some sort of group of people. And like we were talking about, that a lot of Bitcoiners are very similar in their personality characteristics. We have chosen to associate with each other and to become Bitcoiners. And so it's kind of like a citizenship or some sort of state, borderless internet, global state. And yeah, that's what I would say. It's more than software is what I'm trying to say. It's not just software. It's a whole new thing. So, okay, let me check comments and then I'm out for the day. Dex Invictus. Okay, BTC Moon Guy, you got it figured out. Yes, Political Science, he says Silicon Valley donors want Crypto Week, not just Bitcoin Week. 100% agree with that. They're some of the top of the food chain scammers out there. So yeah, 100%. I'm not really a huge fan of Marc Andreessen at all. I think that he and his firm are responsible for a lot of scams. I mean, it was so juicy for them, like their VC business, if they give money to 100 or let's say 10 companies, 9 of them could be total busts, go totally bust. And one of them is a huge success and they make money off that, right? Well, they looked at crypto, the scam side of this kind of movement, and man alive, all it took was like $1 million investment in some marketing for an ICO and getting some insider, distributions early that they could dump on day 1 or maybe day 10 or day 100, whatever. They could just dump them and they got them for early money and it was almost guaranteed. Like every single investment was almost guaranteed to be a 10x on their money, if not 100x, because of they could just spin it. They could just market it. And that's what they did. They're responsible for a lot of this. And it's the dream is not going to go away, but a lot of this stuff has kind of shifted. So you had ICOs and you had NFTs, you had just basic altcoins, you had different algorithmic stable coins, you had algorithmic yield. Then you had Web3. That's kind of gone now already. It disappeared before it had its bull market. I think this is the same sort of stuff that we see in AI. It's the same sort of hype. Where, yeah, I mean, it can do some interesting things. I don't want to go down that whole thing. It's not going to be cost effective to change the world with AI. Same thing with quantum computers too, by the way. Quantum computers, I think, are a joke. They're not going anywhere. And it's just something to sell. Just like Vitalik Buterin, before he launched Ethereum, he was selling simulated quantum computing. Okay. The level of scam has not changed in quantum computing. I don't buy it. I don't think it's going to work. I think there's a huge problem with modern physics, and I don't think they have any idea what they're doing. Okay. Let me check Telegram, see if there's anything. Okay, Spock, I'll take a look at this. Oh, web server down. What's going on here? Oh, I can't take a look at that right now. Spocky say, you wish you knew what Mike Green, the Quad 4 guy, is saying about Bitcoin nowadays. Well, wasn't, no, that was the Hedge Eye dude. Mike Green is the one that named his kid Caesar or something like that. The very pompous one. The Quad 4 guy was the Hedge Eye guy. I don't remember his name. They both cast dispersions at Bitcoin though, so Yeah, I wonder what they're saying now. Okay, let me try loading this one more time. See if it'll load. Not seeing that. Okay. Spencer, what's up, man? Cheers, Ansel. Been listening since the FedWatch days. P.S. One of the rooms in the University of Nebraska College of Medicine is called the Lindner Reading Room. Cool. Yeah, well, I am from Nebraska. From Omaha. My wife worked at UNMC. And there was a doctor there when she worked there that because my grandfather was a painter and he painted in Omaha coming over from Germany after World War II. And he was a painter in Omaha and sold at all the art shows, on the weekends. Like, they have the kind of like a farmer's market, but for artists. And I don't know what you call that. But he sold a bunch of paintings in Omaha. And one of the doctors collected my grandpa's paintings. So that's kind of interesting. And yeah, it's spelled differently. I mean, Lindner, my Lindner is spelled with 2 N's, Lindner. So I wonder if that's in my from some distant relative or what. But anyways, okay. That's it for today, guys. Let me see what is up here with bitcoinandmarkets.com. You can go here and subscribe. I do write a blog periodically here, and I come out with a couple posts a week for the premium folks. And then also for $5 a month, you support my independent content and unique way of viewing the world. But you also can enter the price forecast competition. So each month you get a chance to enter and win $20 in sats. And it's pretty easy. You just go through and fill out the form. This has been going on for a long time. Here's the Hall of Fame. These are all of our profits and a list of everybody that has won every month. We've had a couple months where we didn't do it in the bear markets, but going back to 2019. So it's a fun little thing to do with the community, and you get a chance to win back your monthly cost for the subscription. So anyway, check that out, guys. Appreciate it. bitcoinandmarkets.com. And I'll see you guys all on the next one. Bye.